Welcome back to another episode of Freedom Finance with Lanny, guys. I hope you're having a great holiday weekend, guys. Thanks for tuning in right now on today's video because it's something that's pretty timely, actually. If you haven't caught it, the Fed finished their meeting a few weeks ago and they kept rates steady again for a third month in a row. In fact, people are predicting interest rate cuts to possibly happen in the first quarter of next year. Now, I'll go over what my expectations are, but I am here to help you because what that means is rates will be or have been coming down, but I want you to lock in as much high interest rates right now, as much of an APY, as high of an APY as you can right now, but keeping your funds liquid, and I want you to earn as much as possible while you still can. So if that interests you and you want to hear my take on it, grab your favorite beverage. You know, the coffee, the wine on Sunday, because you are Italian today with me. You can get your liquor and your beer, but let's get it. Let's dive in. So the Fed finished their meeting and Papa Powell and his team obviously kept rates steady in that 5.25 to 5.5 range. But all of the signs and analysts and expectations and Twitter and all the communities right now are trying to debate if there's an interest rate cut come March of 2024. Now, my initial take is I still think that's too soon for a cut, but I do think we see something in 2024. But that's not the purpose of this video. The purpose of this video is I want you to earn the highest APY that you can right now without worrying about immediate rates going down. In fact, you probably have seen the one-year CDs, one-year treasuries starting to really ratchet downwards. In fact, about 3 months ago, you could have bought a one-year US Treasury for 5.5%. And if I'm looking at right now today, here as of the close or end of December 22nd, that now is down to 4.85%. So you're talking 65 basis points of a drop in the treasury market. So if you've been playing with treasuries, all signs are pointing to downward in the interest rate market. And what that's going to mean is that at some point, whether that's already happening or what you would expect, is banks and credit unions and even your fintech platforms will start to bring down those high yield savings rates, those 1 year CDs, give or take a few months on those promos, you know, the 6-7 month promo up to 13 months, those may start coming down. So you really need to prepare yourself if you want to maximize your liquid cash that you want to keep as cash. So I want to tell you a little bit about how you can do that right now without locking it in even in a CD product, with keeping it liquid, with keeping it in some of the highest APYs that you can. So again, I'm here to help you. I'm here to talk to you guys about it because again, I want to help you with your financial, future, with your personal finance situation. I want you to make as much money as possible. So what I do is, sure, I keep some in a high yield savings account, but I tell you what I actually don't do. I don't lock anything up, in a CD. I want to keep my emergency funds liquid. I want to keep my down payment cash that my wife and I have been saving for a very long time liquid for when that time comes. So if you're in a similar boat where you want to keep it liquid, you want to keep it in a cash product, but you want to lock in possibly a higher rate, the no penalty CD could be the right product for you. And that's what I'm doing. I have a lot of our emergency cash in a no penalty CD. In fact, I use a platform, and I'll put the link below in the description. I use Raisin.com, which was formerly known as SaveBetter.com. And what that is it's a platform for all banks, credit unions to host a product on their platform. And they offer high yield savings, CDs, no penalty CDs. Now, the beauty of a no penalty CD is that you are locking in a rate if you so desire. But the no penalty kicks in when you want to withdraw from a CD, that no penalty CD. Because as you are aware, in a normal CD, you usually have to pay sometimes up to 6 months of interest that you've earned, or even if you didn't earn, if you wanted to withdraw early. So the beauty of a no penalty CD is that you can withdraw it at any time. And the best part about it is that the no penalty CDs typically offer a higher APY than your money market or high yield online savings. Because I know you can get those out there probably somewhere between 4.25% to 5.25%. Well, the no penalties CDs are usually higher. In fact, my wife and I, our cash is in a no penalty CD in two products. One's at about 5.35% and one's at 5.4%. So if it stays in there for longer, great, it's earning those rates. As rates are coming down, our rate isn't, because that rate is locked in for, I think we have maybe a 12 and or a 14-month no penalty CD. So even if those high yield savings and money markets start coming down, whether that's early 24, mid 24, or even third quarter of 24, we're still locked in towards the end of 24 and early 25. So the goal was to earn and maximize as much as possible, but to still keep those accounts liquid. In fact, I'll showcase here. I'm going to scroll down, show you a few of those no penalty CD options. It's very easy to open. It only took me a few minutes, and I actually linked my SoFi savings account, which my SoFi accounts are linked below. That's what I use to automate all my investing. And you can even earn 4.6% currently on that savings account with SoFi. I think you get a bonus for either opening up the checking or the money account, or you get a bonus for the investing account. So I've linked my SoFi with Raisin. So anytime we hit a threshold in our savings at SoFi, I move it to a no penalty CD like that. And since it's all, synced in together, it takes me less than a few minutes to open up another no penalty CD when I want. In fact, you know what's so funny? Is at one point a few months ago, I think I was in a 5.05% no penalty CD. And once I noticed on the Raisin website that there's a product out there for, I think it was like 5.35 at the time, I simply closed that 5.05 no penalty CD and put it right into a no penalty 5.35. So you can actually continue to ratchet up your rate if somehow there's an advantage there or there's an opportunity there to do so. So I wanted to really put this video out there because I feel like it's timely. I feel like it can help you right now as you're heading into the new year. Again, it's better than a high yield savings account. It's liquid, and you're locking in some of the highest APYs, some higher than most fixed with the penalty CD. So the no penalty CD on the Raisin website, I think, is a great option for you to make as much income, as much fixed passive income for you heading into 2024 and even bringing that into 2025. So we're talking over a year from now, that it could still provide you a good passive income stream if you so choose. So links are in the description for raisin.com. Again, my wife and I, we choose it to keep our accounts liquid, to lock in that high APY rate, and we can withdraw it at any single time without penalty, such as if and when, knock on wood, we have a chance somehow to buy a house that's not outrageously overpriced, guys. So let me know as well in the comments what you're using to maximize your cash right now, where you hold your cash, keeping it liquid at your highest APY. Again, I'm choosing Raisin just to, get the most out of my emergency savings. And no, this is not any sort of paid advertising at all. I just like to talk to you guys about the products that this guy uses. Subscribe to this channel. Definitely like this video if you haven't. Let me know what other content you'd like to see that can help you on your personal finance journey. Keep saving, keep investing, and let's get to financial freedom. Thanks for rocking with me, and I'll catch you on the next one.